My name is Dr. Clint Bourne, author of the text, Making Sense of School Finance, a practical state-by-state approach. This presentation, School District Local Revenue, Part 3, aligns with the text Chapter 2 and follows the presentations Local Revenue Parts 1 and 2. School District Local Revenue Part 3 emphasizes property tax relief, referendums, as well as property appraisals and reappraisals. Tax reductions for residential property are a common means for states to ease the tax burden for specified property owners. Many states have multiple programs to reduce the taxpayer's bill, with different benefit levels depending on taxpayer characteristics. Circuit breakers, one such general program, offer tax relief for eligible taxpayers, such as military veterans, widows, low-income property owners, or senior citizens who earn below a certain income level. According to the Lincoln Institute of Land Policy and George Washington Institute of Public Policy website, 29 states and the District of Columbia grant circuit breakers. To see specific programs by state, go to their website. Homestead programs, another property tax relief initiative, reduce a part of an applicant's assessed value. Senior citizens, disabled persons, veterans, and military personnel may qualify by state law. According to the Lincoln Institute of Land Policy and George Washington Institute of Public Policy website, only 7 states do not offer a homestead exemption program. Economic Development Initiative programs, known as a property tax abatement, encourage private investment through a partial or full reduction in property tax liability for certain manufacturing, commercial, and/or retail parcels. A governmental agent, such as a county or city council, awards a tax abatement after a public review process that is often both bureaucratic and political. According to the Lincoln Institute of Land Policy and George Washington Institute of Public Policy website, all 50 states and the District of Columbia offer property tax abatements with specific programs differing by state law. Although every state tax abatement program differs, just 5 states exclude school officials from abatement decisions, and only 5 states reimburse school districts for financial losses due to abatements. To see specific programs by state, go to their website. Here is an Ohio tax bill showing reductions and exemptions. Number 14 shows a current agricultural use valuation, or CAUV, reduction for farmland. A farmer may apply for this reduction to the county auditor. On this property bill, you'll notice that nothing was deducted for farmland. Number 16 is a House Bill 920 reduction for all property taxpayers that reduces a voted levies tax after a reappraisal. This reduction intends to offset a taxpayer's increase in real property value. Number 18 is an automatic 10% rollback reduction for all real property taxpayers, which is paid by the state. Number 19 is an additional 2.5 reduction for owner-occupied houses. Number 20 is a homestead exemption. Notice this taxpayer does not qualify. Here is a California tax bill. Notice the $7,000 homeowner exemption afforded to the taxpayer upon application. This bill also shows a school district parcel tax, which is a different kind of tax than a property tax. When a school district wants to collect property tax above statutory limits, state law considers 2 types of referendums: operating levies and bond issues. With voter approval in most states, an excessive operating levy referendum grants additional money for any expenditure within a school budget. Bond issues exclusively raise funds for non-operating expenses or capital outlay expenditures for new school construction, building renovation, buses, equipment, and other fixed assets. 33 states require voter approval for school districts to boost operating millage above statutory limits. Depending on the jurisdiction, 6 states and the District of Columbia require a budget vote by a borough, school board, county, or city committee members to increase excess millage. 6 states require a vote by the community on the budget to increase millage. Dependent school districts do not have taxing authority because the parent government must propose referendums for excess tax millage, including districts in Massachusetts, North Carolina, and Virginia. Voters in California may not pass a property tax increase, but may pass a parcel tax increase. For example, Ohio school districts may approve various types of levies, limiting operating 1 through 5 years, permanent operating, indefinite, emergency to avoid an operating debt 1 to 5 years, or a renewal after an expiration of a limited or emergency levy, operating income tax, and a permanent improvement, only for fixed assets. To arrive at a property's value, tax assessors appraise individual property, which represents an assessor's opinion of a single property's value. The market sales approach to determine the fair market value is the most common strategy for residential houses. This method compares the selling price of similar houses with respect to location, market variables, condition, neighborhood, and age. A mass appraisal aimed at establishing property owners' tax commitment also establishes classifications and fair market values for all property in a given area. Because mass reappraisal cycles vary by state law, each state maintains an established procedure. Some appraisers conduct mass appraisals in sections of the state rather than at one time statewide. Each state institutes a particular set of procedures to appeal an assessor's appraisal. After receiving the assessment and notice, a property owner holds the right to appeal the appraisal value. The Value Adjustment Board or County Board of Equalization arranges a meeting, examines an owner's justification for a change, renders a determination, and adjusts the fair market value of the disputed property when reasonable. To appeal an appraised property value, a taxpayer should contact the agency in charge of the appraisal, which is often the local assessor or auditor's office. This concludes School District Local Revenue Part 3 on property tax relief, referendums, and appraisals.